Thanks for clicking! The Canadian Real Estate Association, the CREA, has released its data for the first month of the year, showing a Canadian real estate market that may be tightening.
We'll relay the message.
Indeed, as we'll see today in outlet after outlet, the media repeated the CREA's argument that sales increased by 22%. Though that's not exactly what the data says. And the data from the CREA was accompanied by a report from TD, which was quick to issue some degree of caution in assessing the high sales numbers. The CREA release was also accompanied by the monthly interview with world-renowned straight shooter and CREA economist Sean Cathcart, who, as we'll see, actually made some good points in analyzing Canadian real estate data.
I need a shower.
So what I want to do today is go over Canada's real estate data for the month of January, take a look at how the CREA compiles and communicates its data, and how the media follows, take a look at TD's report, discuss the CREA's interview with Sean Cathcart, and then go over what to look for next. Speaking of next, Canada's inflation data is set to be released early next week, and if it doesn't show some real progress, we could see a big increase in mortgage rates. We'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home that represents the most popular set of features. Despite the major increase that we saw in sales, the benchmark price was down in January. The benchmark in December was sitting at $726,700 and fell about $9,000 to $717,800 in December. The benchmark price is down about $9,000 since last month and up only $4,000 since this point in time a year ago.
Always be closing.
With that said, the average price was up in January, coming in at $656,000 in December and bumping up to $659,000 in January. So the average price is up about $3,000 since last month, but up over $45,000 since this point in time last year. Now, there is a good reason for the stark difference between the benchmark and the average price, but we'll get to that later. As for sales, you'd have to be living under a rock to not know that they increased by 22% from last year, as the media reported that figure ad nauseum, though that's a 22% increase from a 14-year low. With that said, as we've mentioned in multiple other videos, the number of sales doesn't really tell us anything about the current real estate market. We also need to look at the number of listings.
That doesn't matter.
And here is where we get to the problem of the 22% increase in the number of sales, as being purported by the media, as the numbers don't match. With 33,477 sales in January of 2023 and 39,399 sales in January of 2024, that's only a 17.69% difference, a far cry from the 22% being reported by the media. And the reason, of course, is that when the CREA reports that 22% increase and the media follows, it's using non-seasonally adjusted data, meaning the headlines are based off of raw data that does not strip out real or perceived seasonal fluctuations. And that data, the data upon which these headlines are based, is not publicly available. We can only get the seasonally adjusted data, the data of which the underlying calculations, says the CREA, are yawn-inducing stuff to anybody but statisticians.
You're not smart enough.
Which begs the question, why is one method of data calculation being used in the media for the public and another method of data calculation being used in the data that is offered? Why do we get the non-seasonally adjusted number of sales, the 22% increase in the number of sales, but we don't get the non-seasonally adjusted number of new listings? Any professor will tell you in any first-year university class,
The f is that?
in any first-year university class, that the data that you offer in your research had better be accessible and verifiable, lest you end up with a 0 on your paper. And this creates a real problem in trying to assess the impact of that 22% increase in the number of sales, as we can't use a similar method to find out the number of new listings that came to the market. If you have a 22% increase in the number of sales, but you had a 400% increase in the number of new listings, then that 22% doesn't mean nearly as much. With that said, if we do use the seasonally adjusted data, which last year's wasn't even available, I had to use a saved Excel document from this point in time last year. If we do use that seasonally adjusted data, we can see that there was a 3% increase in new listings, which is still a far cry from the 16% increase in the seasonally adjusted sales data that we talked about earlier, But we don't know, we aren't able to get access to the same data used to compile that 22% being reported in the media, and as such, that 22% really doesn't tell us anything. But I digress. This is the only data available from the CREA, so that's what we're going to use. And we can start off by looking at the months of inventory measurement, the MOI, which measures if no more homes came to market, how long would it take for Canada to completely run out of homes for sale. The MOI in January was 3.7 compared to 3.8 last month, and compared to 4.1 in January of last year. So, on a relative basis, compared to December of 2023 and January of 2023, Canada's inventory is getting tighter. And this trend was also reflected in the sales to new listing ratio, the SNLR, which looks at how many homes are coming to the market versus how many are being sold. The SNLR was 58.8 in January, up from 57.6 in December, and also up from 53.1 last January. So, in general, the number of sales are up, the number of listings are up, though by not as much. When we take the two together, when we look at the MOI and the SNLR, Canada's real estate market did in fact tighten in January. With that said, TD was quick to note some caution when interpreting the data, as decent weather in January probably helped to drive up sales. It probably wouldn't have helped with listings, but it could definitely help with sales, getting buyers out into the market. And while TD did note that sales are on track to exceed its expectations, it was also quick to note that those expectations were based on lower bond yields, which are currently up about 50 basis points since the beginning of this year. So, in summary, sales are up, the market is tightening, though the benchmark price is down, and the average price is up. However, on that average price, the CREA's Sean Cathcart noted a bit of caution.
Reason the average national price is up is largely because of sales, not prices. Are bouncing back in Toronto and some other big expensive markets like Hamilton and Montreal, Vancouver, most of the Ontario's greater Golden Horseshoe and Cottage Country. Many of these places have a lot more recovering to do compared to more affordable markets where activity has remained stronger the last 2 years. So it's not that prices are rising in those relatively more expensive places. It's just that those expensive properties, as they sell in higher numbers, are coming back into the national sample that we derive the average from, and it serves to raise that average.
And yeah, that's definitely a good point. If, say, London in a given month sold 5 houses worth $1 million and 1 house worth $500,000, that would make the average price look like it's $970K, when, in fact, Canada's average house price isn't anywhere near $970,000.
It will be.
As such, as noted before on this channel and mentioned explicitly by even the CREA, though the average price is good for establishing trends over time, it must be taken with a grain of salt when just looking at a single month's worth of data. So, in summary, using the CREA's seasonally adjusted data and relying only on that data, not the data being reported in the headlines, it looks as though the market is in fact tightening, with the months of inventory measurement down and the sales to new listing ratio up. Meaning, more of what comes to the market is selling. With that said, as we saw with the divergence between what is being reported in the media and what the data actually says, it's important to take the data with a grain of salt. We will continue to track Canada's real estate data on this channel throughout the year. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.